Hey, totally lit. Wow, I'm honored to share this tonight. The Million Dollar Baby concept is something that I'm very passionate about because, like Ed said, I am a mom of three, and all of my children have this, even though one's that's 28 and married. I have a 16-year-old and a 15-year-old, and also my grandbaby is a million dollar baby. So I'm going to share my screen. Let me know if you can see it. Let's see here. So we want to learn different ways that we can actually educate people on how they can save for their children's college. One thing that we want to talk about is what are we facing today? This is every student's dilemma. Why college preparation is more vital now than it ever has been before? Because college tuition has grown by nearly 66% in the previous decade. And I'm sure everybody can agree that when they went to school or got a degree, right now, if you Google it, it's really have increased. It's either doubled or either tripled. Student loans currently outnumber credit cards and auto loans combined. Now, that's a huge problem, right? 80% of students apply to colleges where they are undecided about their major, resulting in them taking too long to graduate, according to the National Center for Education Statistics. And we understand that when they switch that major, what is that? It costs them more money because they're there longer trying to figure out what they want to do. So just consider spending 16 or more years in school, graduating with massive debt and little hopes for a long-term career. I heard on a platform where they had somebody that was in medical school, was in 445,000 worth of debt and failed the bar. So here they have all these student loans, and guess what? They can't even get the degree. Now that's scary. So normally ways that people actually save for their children's education, when I did a poll, the most common way was a 529 plan. And for those that don't understand what a 529 plan is, I'm going to go a little deeper in the next slide. Another way is people just save with traditional savings account. They may have a custodial plan, mutual funds, prepaid college tuition plans. Those are just a few ways that people are saving for their children's education, right? So what is a 529 savings plan? And basically all this is a state-sponsored tuition program that's designated to provide tax incentives to encourage families to save for high costs of college education. And here's a little caveat because it says our daughter is only in preschool now, but with the rising cost of college education, it is important for our family to invest in her future now. And that's from one of my clients that was giving their sentiments about starting saving for their children when they're very young because they have time for a lot of that money to compound and grow. So some advantages and disadvantages of the 529 is that we understand that it is tax deferred growth. You do have tax free for education expenses, and it is easy to set up. But let's look at some disadvantages so we can look at alternative ways to save for college. Of course, you have the tax penalty, meaning that if you don't use this funds for education, you will be penalized. There's only one beneficiary that you can designate. There's normally limited contributions, and this has to be disclosed for financial aid, meaning that if you have a 529 set up for your child, it doesn't matter how much in it, it will affect them being able or eligible to receive financial aid, and it could cause them to also be disqualified, right? So here's another example of one of my business partners lost money in their 529 the year before their son's first semester in college. That's a risk you don't have to take now that you're more informed of a different way. So attention parents and grandparents, let's talk about a different way that people are saving for their kids' college, what
Pretty
kind
money
of world
savvy.
it is and why it's important. So basically just understanding it. There's many ways to set this up, and it's just the concept. But say, for instance, somebody had a baby yesterday and they start contributing $100 a month for the first 18 years of the child's life, and they stop contributing thereafter. Your child could have a retirement nest egg of $1 million. And some of that could be utilized for college expenses, right? So here's just a breakdown of how that works. You put this plan in place for a child. The younger they are, the better, because they have something they have time on their side, allow this money to work for them, even though it's a small amount. So they do this for 18 years and they stop But what happens in the third column? The money continues to compound and grow. So they can utilize this throughout their lives, pay it back, and then it continues to go on with them throughout their entire life. So it's not just for college because it gives you more flexibility, meaning that if you set this up, this can be utilized for your children's college, but it also can be utilized for many other things as well. A down payment on the first home, helping with a wedding. Say, for instance, your child said, I want to start a business. I don't want to go to college. College is not for everyone. So they can actually utilize this in order to start up a business, or they can save it and have it as a nest egg for retirement, right? So, but let's talk about some of the options and the features of an IUL. So many parents are shifting from traditional 529 college saving plan to an index universal life insurance policy because it's a strategy that they utilize to save for their children's education. Here's why. The number one reason is you do have the tax-free growth and the withdrawals. Like a 529, an IUL policy allows for tax-deferred growth, but however, those funds from that IUL can be assessed tax-free through policy loans, providing more flexibility. And that's a great thing. So when you have more flexibility and options, that's that's better than having it only utilized for one thing. Then there's also the 529 plans are specifically designed for education expenses only, and the withdrawals used for those non-qualified expenses incur taxes and penalties. So in contrast, by utilizing the IUL strategy, this allows parents to use funds for any purpose, whether it's for their kids' college to help with that, if that child wants to go to trade school, they want to start a business, or even purchase a home. The number three that I spoke of is that's no impact on financial aid eligibility. The assets in a 529 plan counts against a student when applying for financial aid. So that potentially is reduce their eligibility. If it's an IUL strategy, it is not counted as an asset for the FAFSA. And we know that's the application for financial aid, which allows families to qualify for more financial aid. So if they have this strategy in place, that child can still qualify for governmental grants and scholarships and not be deemed or accounted for, versus if they have a 529, it can hurt them. The other thing is we have the market protection and the steady growth. Those two testimonies that I got from some of my clients where they actually lost money, or basically they started saving early because they know the cost. The 529 plans are often invested in the stock market. And we understand those ways to grow money, which means that's in a variable account, meaning that the value can fluctuate with the market performance. And that's something we have no control over. We do not know what the market is going to do tomorrow. If we did, there will be no Wall Street, right? But if you have a strategy with the index strategy like an IUL, it provides for market-linked growth with downside protection. That means that your funds will never lose value due to the market downturn. So if the market takes a dive like it does on an average of every 4 years, and you're concerned about if your child will lose their money, if you use this strategy, guess what? That money is protected from that happening. Also, a 529 plan is primarily for education, but then IUL can be built up lifelong cash value for your children throughout their life. And another big caveat is it's in life insurance, so it also comes with a death benefit. So even if the child decides not to attend college, the policy can continue to grow, but be used for retirement or provide financial security for the family. And that's a big thing because this is like an army Swiss knife. You can utilize it for different things. For college, it has a death benefit. And we know that these also have living benefits, meaning that God forbid, if that child gets in an accident or in college, or if, as a nurse, I witnessed a child. I remember this child that was riding in the car. And we've all been crazy with those things where the kid was riding in the car with the window down, hanging out, and ended up falling out of the car. And she was in intensive care with a severe brain injury. She was in a coma. Thank goodness she did recover, which she had a lot of disabilities. But if that parent had this solution in place, guess what? They don't have to worry about missing work to be there for their child because now they can tap into the living benefits that's included with this plan as well. So when you understand your options and the flexibility and having more options to utilize, that makes this plan like more it's more beneficial to have, because not only do I just can use it for college, I can use it for everything. There are no contribution limits. So a 529 plan does have state imposed contribution limits, but an IUL, if it's designed correctly, it allows the flexible contributions without government mandated caps, making them ideal for some of those high income earners looking for additional tax advantage savings. Each state has a limitation, a contribution limit on how much can be put into these plans. So this strategy can be also used to complement another strategy because it can allow parents to dump more in, to have more access, or those high income earners that said, okay, that's not enough. We can look into designing something for those people that they can increase those contribution limits for their children. So while a 529 plan is a good option for those who are sure their child will attend college, the IUL strategy provides greater flexibility. It also provides protection and a long-term benefit. So families looking for a more versatile way to save for education and beyond, or turning to IUL as a smarter financial strategy. So I had a cute little video here. Hold on, let me share it. It was a baby. I got to share it with everybody because we have a few minutes. So let me find it, download it. I thought I had it pulled up, but I guess I did. Here it is. It's an AI video that's so cute. Hold on.
Called a 529 plan.
You're muted, Kimmy.
Okay, so that is the concept behind the $1 Million Plan, and making sure that you set up a strategy to designing how you want in order to utilize for college. So I'm gonna turn it back over to you, Ed.
That was
Outstanding, outstanding,
great.
outstanding.